Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is market historian Bob Hoye. He's the chief investment strategist for chartsandmarkets.com. Welcome back to the show, Bob.
Yeah, hi, Jim. I always look forward to our get-togethers on Friday.
So far this year, it's been the hottest year ever for initial public offerings. Why?
Oh, as we used to call them, it was new issue market. You do a new issue. A company who is private does a new issue of stock to the public, and then they call them initial public offerings and IPOs. Anyways, it can be the feature of the concluding part of a great bull market. And I remember the one in 1968 was absolutely incredible. I was working with a very good regional dealer, and there were unbelievable new issues coming to the markets with doubles and triples, and it was fantastic. And and then I remember reading in history that 1962 was a crazy new issue market, and the business historian who wrote that one said that it was it was called the Great Garbage Market of 1962 because the demand for new issues was so strong that the underwriters could come up with anything. And of course, anybody who had a company and saw a premium bid for newly created stock, you got to go for it. So, anyways, a new issue market shows signs of terrific speculation, and that is often very near the top of a bull market. And this year has been really a good year in the markets, coming out of the dismal December when everything was getting trashed. I mean, the S&P was down 20%. Some of the high-flying stocks were down 40 and 50%, so it was pretty dismal. Crude oil had been beaten up, and I remember on December 26th, we got a sequential buy on the S&P and on crude on the same day, and up they go. So we thought out to March, April would be a reasonable target for timing. Base metals had their high in March. Crude oil had its high in May. And then you had actually quite a sharp correction in crude down until last week when it is fascinating, Jim, how you can have an oversold condition in like in this case, crude oil, and then all of a sudden you get a disaster scene in the Middle East, and all of a sudden it changes and up it goes. So I don't know. We wouldn't chase it, but it shows how lively the markets can be. And of course, gold moved with it as well. And gold can move on scary political threats, that kind of thing. We call them crisis events. And so we're getting that. And the other thing is that you've got a pretty good rally going on for gold, silver, crude oil. At the same time, you got a really good rally going on for the long government bonds, U.S. Treasuries and Government of Canada bonds. Hey, they're very much in demand. So whereas historically, if you had a good bid for rising commodities, the long bond would be heading down. So what this shows is they're willing to speculate in everything. Industrial commodities, base metals. Lumber has been very good. and as we're talking about crude. And then you've also had, I just looked it up the other day, a really good rally for even ones that we don't regularly watch, like iron ore. It's gone from, just my memory here, maybe 68 up to 100 in the last year, which is pretty outstanding. So the urge to speculate is out there, but it's in everything. As I said, you historically you'd never get a really strong rally in high-grade bonds when you've got industrial commodities going up, and then not just industrial commodities, but you've had, since the middle of May, a very sharp rally in the agricultural prices, mainly the grains, where because of a cold and long and wet spring, it's really impaired the ability of farmers to get their first planting, seeding done. So, and who knows how that's going to turn out. So, agricultural prices have had a good rally, and but to wrap this one up, Jim, people are willing to speculate in anything, and it's not selective. It's more or less everything at the same time. So, but what we're getting here, what we're watching now for, of course, in crude oil, and we've had some good calls in that one, is again watching for when this very bold move will peak out. And also we're getting some overbought stuff on the rally in long treasuries or long Canadas. So there's opportunities here at hand on these items. Now, for example, if you're heavily weighted in long treasury bonds, the story there is that interest rates in the U.S. and by implication Canada are going to decline similarly to what's happened in Europe. Particularly, they kind of like what's happened in German bonds, which have gone to zero, in some cases negative yields. So the idea, and this was the same thing in July of 2016, when investors were piling into long treasuries in the States and long governments in Canada, because they were absolutely convinced that that North American yields would get in the direction of European yields. And we noted the technicals in June 2016 and said that you could, it's a big of a mix of market in the U.S. that you can do the technical analysis, and had all the overboughts, and said that this would likely hit the European market as well, which it did do. And at that time also we thought that, lower grade corporates like junks or high yield had further to rally, and they're still firm, but I think getting overdone. So where everything has been rallying, everything has become risky.
We'll have more with Bob Hoye right after this.
Grand Portage Resources' Herbert Gold Project in southeast Alaska highlights increased gold resource, indicated and inferred, of 860,000 ounces, in excess of 10 grams per ton gold. Expansion drilling is planned on the Herbert Gold property for the summer of 2019. Grand Portage Resources trading symbols are GPG on the TSX Venture, GPTRF on the OTCQB, and GPB on Frankfurt. For more information, please visit our website, grandportage.com.
Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Welcome back. We're speaking with Bob Hoye. Bob, gold had a terrific pop on Thursday. What's behind this sudden jump in that pricey metal?
Yeah, well, gold's been going up for a number of months now. The action in the U.S. dollar had stalled out, but if you want to go back to early 2018, when markets started to become volatile. And if you were owning gold in most any other currency, Canadian dollar or euros, where these have gone down relative to the U.S., hey, you've made some money out of it. But the view that we've had is that should another financial crisis come along, the really serious and careful money goes to the most liquid items, and the most liquid, one of the most is of course gold. You can buy it, and then the other liquid item, which is also a big market, is the for U.S. Treasuries. Less than 1 year term. So you're going to have, and probably it started already, because the T-bill rate in the U.S. has been plunging since, well, the 6-month bill has been declining since December, and the 3-month bill since April, and of the last few weeks, the decline has been very sharp. Now, that suggests to me that the economy is slowing, and that the demand for speculative money at the short end is diminishing, and then possibly going the other way, the careful money is going into Treasury bills and driving the yield down, and it's got very little to do with Federal Reserve policy. So the declining bill rate is a warning for us. So this, the urge to go for liquidity is really important. And so what is happening is you end up with a bid for gold if you are positioned in U.S. dollars, and you end up with a bid for the Treasury bill, which is also a bid for the U.S. dollar if you're outside. So there's going to be investment demand for gold, because it's a liquid place, and there's going to be investment demand for the Treasury bill because they're liquid. So to try and make a big gain out of gold in U.S. dollars, I think is quite limited. We can get rallies like this, but if the financial markets become nervous after August and going into the fall, you'll find that bid for the Treasury bill goes up, and so will the dollar. So, but where one can make money in the gold sector is in the gold stocks, and unfortunately they may be vulnerable to some financial problems in the fall, but we're heading towards a period, and we've been saying this for quite some time, where the opportunity in gold stocks will really be outstanding. We took a position in 1st of November, and we're looking for a good rally out to maybe March, which we got. But there will be another and perhaps even bigger opportunity to buy the gold stocks ahead of us. So, fortunately, with our work, we're covering the whole spectrum from stocks and bonds, and within the interest rate market, the yield curve, credit spreads, money market stuff, and then commodities, like the industrial commodities, and plus then always watching the foreign exchange markets, the currencies. So, and also, by the way, on the Canadian dollar, we have spent the last few months with the story that somewhere around mid-year, the Canadian dollar could turn up, as it began to discount the probability of the Liberals losing the general election in October and the Conservatives winning. And I think this is part of what has been firming the Canadian dollar up. And of course, more recently, it's the jump in crude oil prices, and also the Liberals announcing that, now it's okay to expand pipelines in Canada, which is purely political. My view, Jim, is that if the Liberals were to get in again, despite what they're saying now about pipelines, you'll find that the bureaucracy will bury any advancement in pipelines, because you know that Prime Minister Trudeau, is one of his major concerns is that when you've got expanding a pipeline, you've got construction workers, and these construction guys have toxic masculinity, and Trudeau does not want innocent communities being invaded by toxic masculinity. I mean, the guy's judgment is hopeless. So at any rate, the announcement on the pipeline was also a plus for the Canadian dollar, but I don't think that the Liberals should be trusted when it comes to natural resources and economics and things like that. So we'll see how all of that goes.
We'll have more with Bob Hoye right after the break.
Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO, on the TSX Venture Exchange. Rainy Mountain Royalty Corp. is a Canadian-based mineral exploration project generator. The company currently holds multiple property interests in Ontario with joint venture partners and is seeking further joint venture partners for other drill-ready properties in our portfolio. For more information, please visit our website at rmroyalty.com or call me at 604-922-2030.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Bob Hoye. Bob, one of the headlines that caught your attention, warning lights flashing in China money market. Why the warning in China?
Yeah, they've had the greatest economic expansion and boom in history, much of it propelled by, believe it or not, communist government in Beijing. And the whole thing has got advanced way beyond any support that could be found. And also their stock market peaked quite a while ago as well. So, but what you want to look for, and we also have been seeing it for a number of months in Turkey, where it happened, like you have a central bank there, and they have their reserves backing their currency, and what happens is all of a sudden in a speculative boom, their reserves just get sucked out of the bank. Then they have to raise interest rates to try and build reserves, and then that kills the economy. And also their currency, like the Turkish lira, when it goes down. So then you have a similar problem, and you can't say it's a lesser economy in China, but you can call it an outlying economy. It's an outlier from the financial centers in London and New York. So, and this is classic stuff, Jim, but even the Roman writer, Cicero, who was very astute, wrote 2,000 years ago that when you have a financial pressures being discovered or a crisis, as he wrote, in the eastern provinces, which would be Phoenicia, so if there was a financial crisis there, as he wrote, it will inevitably hit the financial market in Rome. So this is where this headline is important, that warning lights are flashing in China's money market, and it always shows up early in their money market, which would be, less than 1 year, and also the spreads and things like that. So you've got problems in Turkey, Argentina, and you've got problems of a similar nature in China, and it will inevitably hit the senior money markets, as I say, in London and New York. It's just a matter of how long does it take to travel. At least I haven't seen anything yet where some central bankers have said, oh, well, Turkey's not a problem. Turkey's problem can be contained. That's the one I'm looking for. And then I don't know whether they can say that about China because it is so big, but we'll be watching for one about Turkey or Argentina or any other country that's suddenly discovered it's out of reserve. So if you see a problem coming from outlying exchanges and realize that they're ultimately going to get the senior money markets and exchanges, then the next question, Jim, is when is that likely to happen? So you go back to all of financial history, and most of the serious liquidity problems have been discovered in the fall of a year when you've had a big party in that year, and as we've been discussing, it's been a big party since the first of the year. So the risk is increasing and could be discovered after August. But right at the moment, other than some war threats out of Iran, which I don't think too much is going to come from that, I think there's much more threat in the financial markets, which have become so speculative.
Bob, thank you so much for chatting with us.
Well, we did another one, Jim, and I look forward to next week's.
My guest has been market historian Bob Hoye. He's the chief investment strategist for chartsandmarkets.com. If you have any questions for Bob, you can send them to info@howestreet.com, our YouTube channel, Talk Digital Network. Find us on Twitter @HowStreet. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.